Palantir Technologies is a public American software company that specializes in big data analytics, headquartered in Denver, Colorado, and founded by Peter Thiel, Nathan Gittings, Joe Lonsdale, Stephen Cohen, and Alex Karp in 2003. Today we are considering pros and cons investing in Palantir, so stay tuned. Let's start from advantages. Palantir has lately been growing its revenues across both its reporting segments. Its government and commercial revenues, for instance, have increased by 66% and 27.3% respectively over the last 1 year alone. These elevated growth rates across both its segments highlight excellent execution on the management's part. In terms of earnings, Palantir's revenue grew at a 49% year-over-year pace in Q2 to $375 million, matching Q1's growth pace exactly and quashing Wall Street expectations of $361 million. The single most important metric for assessing Palantir at this point in analysis view is Palantir's 39% year-over-year revenue growth that is very, very strong. This is the second consecutive quarter where revenue grew by nearly 50% year-over-year, well ahead of management's guidance for 30% annual growth through 2025. Additionally, the seeds of future growth have certainly been sown with 62 deals of at least $1 million closed in Q2, pushing the total contract value booked up by 175% year-over-year to $925 million. So Palantir right now is undertaking a slew of measures, such as increasing its sales force, rolling out free versions of the platform for major enterprises, and switching to a customer-friendly payment model. This is important because as these new customers get familiarized with Palantir's platforms and integrate its offerings into their workflows, they are likely to ramp up their spending over the subsequent quarters. On the other hand, there are also some concerns regarding Palantir investment. The one negative in the quarter was the continued difficulty faced with meaningfully growing international commercial revenue. As overall commercial revenue grew by 28% year-over-year. This number is concerning in the sense that it means that they are still relying heavily on their government business to drive their revenue growth to a level that enables them to beat their overall top-line guidance. Something that might be of concern of recent Palantir's company is its sales model, as it hasn't delivered as it's supposed to. So management is right now taking considerable strides to achieve this, as they are continuing to invest aggressively in accelerating growth in this sector. In Q1 alone, they added nearly 50 new sales personnel, so the outcome of this act may bring some results in the quarters to come. The biggest disappointment from the Q2 numbers was the evidence that they continue to significantly hurt shareholder returns via stock-based compensation. In Q2, stock-based compensation expenses increased by over $32 million, while the adjusted operating income remained roughly flat. As a result, the company's true operating loss increased by over $32 million, and this is a troubling trend that will need to reverse in the coming years. In terms of valuation of the stock, there are some concerns that Palantir may be overvalued. So when looking at its valuation multiples on a standalone basis, it may make some concerns, but Palantir is right now trading at a higher PS compared to its peers. However, it's also evident that Palantir is growing also faster than most of the other stocks in its peer group. So this suggests that these investors that are putting some cash into Palantir stock are forecasting a significant upside in Palantir's shares and are discounting the bearish narratives floating around media. In order to conclude, the challenge for Palantir in the next quarters to come is whether they can maintain that level of performance they presented during last quarters. Given the aggressive investments during the quarter, it's unlikely that the adjusted free cash flow numbers will repeat the stellar performance of quarter one. So obviously, in order to make sense of Palantir's valuation, we need to have a look a few years into the future. If management's guidance sticks at face value and Palantir does generate 30% year-over-year growth through 2025, then its FY25 revenue would be over $4 billion and will make valuation even higher than it's right now. Palantir is clearly approaching to build their business by becoming debt-free. That's something as of high importance. Continuing to aggressively build a portfolio of high-growth, high-potential startups that are building the business around the platform and stockpiling gold and cryptocurrency alongside cash on their balance sheet, it makes the stock something that really outstands the competition. Palantir also finds its interest among the biggest investors. The Nasdaq site states that institutional investors collectively bought roughly around 270 million of its shares on a net basis in the last 13F filing cycle. Company has around 1.86 billion shares outstanding, which means that these investors collectively bought a gigantic over 11% chunk of Palantir's entire share total in the last cycle alone, and in fact the number of institutions that increased their holdings in Palantir outnumbered those that reduced their positions in the name by a factor of 2.4. Okay, so you've just got a viewpoint on where Palantir Technologies might be heading in the future regarding its fundamental analysis. Right now, let's look at the technical chart and try to find out where might be a good entrance in order to make the best of our trade or investment. Right now, Palantir Technologies is consolidating within a quite wide range. That is limited by 20.8 USD and also 27.6 around. So as of 26th of August, that this analysis is prepared on. We are right now just got out of this bearish price formation, and that was a head and shoulders that was negated after this stock market slumped on May 2021, and afterwards we can find there is no specific direction on where Palantir might be heading next. We are holding this 2021 bucks territory very strong, so I don't find any risk as to collapse below this 2021 area in the nearest future. After this data earnings season, we found there is a huge appetite for this Palantir Technologies stock to move higher. Just after earnings to be published, stock has jumped on above 8% in terms of price, and right now is forming something that is resembling a bullish flag that might be a catalyst for the future growth. By the book, the bull flag is exactly the formation that is preceding another growth. So the 27 area to be tested is highly expected in the next maybe 2-3 weeks. So if this Palantir Technologies stock will just remain in this area of 24 and 25 with holding this bull flag, if you are just a quick trader that is taking advantage on just short moves, that might be a good position to just bet on a long position from 24-25 area with a take profit around 27.3 bucks. Otherwise, I would wait for this exactly resistance to be broken. So if the daily or even the best weekly candle will close above this 27.4 threshold, I would find a good opportunity to for Palantir to test their recent highs of 37 on the weekly and even further 44.9 only daily. And as we discussed on a fundamental side, in terms of Palantir stock valuation, there is a huge institutional background that has just been kept some cash on a sideline in order to buy this stock even lower. So I would find that's a huge support for this stock for future growth.